Hey guys, welcome back to another video. Last 2 days gains have been completely erased, but I'm fine with that. It's not a big deal. I've been through this before. But what we're talking about in today's video is why the market going down should make you happy as an investor, and 3 stocks that I'm buying now in preparation for the market flip. So if you guys do enjoy this video, all that I ask is you smash that like button, also subscribe to the channel. Thank you guys so much. Let's get right into it. So Meta Platform's up 4% today. I think I called this out 2 videos ago. Very lucky timing, but I was very right with this. They actually just unveiled an AI software platform that actually helps out businesses, so that's going to be integrated into the platform. But that's not what I want to talk about today's video. So unless you are about to retire or buy a house, it does not matter where the stock market's going. Why? You can buy the same great company for an even cheaper price because of unrelated reasons. So there's uncorrelated events going on in the world right now that are making some very attractively priced stocks. So for example, the Iran war, the very popular war that is going on right now between the US and Iran. This is a temporary problem, but the market is treating it like it's permanent. These are just news headlines that are going on. Everyone probably says something different. No one knows exactly what's going on. It seems like it's about to end every day, then it gets worse. This is a temporary problem. It could go on for a while, but key word right here is temporary. But people treat it like it's going to go on forever. This creates opportunity. Same thing with oil. Oil prices rarely do this. If you zoom out to the broader horizon of things and look at the max time USO price chart, they're down 74% all time. This company was not a good investment. You would have lost 3/4 of your money in the past 20 years from putting money in here. So you could have put your money in anything else, and for the past 20 years, you probably would have done all right. So definitely not the best opportunity right here. I would not buy oil. But remember CapEx, this was a great opportunity. Amazon was down over 10% year to date. Now they're up over 7%. They've actually dropped a little bit recently, but still, huge stock. Same thing with Alphabet. They were down almost 10%. Apple was down almost 10%. All of these companies have had 20% plus swings since, the beginning of the year because of this opportunity. And this opportunity is very easy to take advantage of. It's not hard. Any investor can do it. And these stocks right here are very disconnected from the price I think they should be valued at. So number one, being a rational investor makes this buy way too easy. Okay, I mean, this is just too easy of a buy. If you're a rational investor and you look at the company's financials, you look at their business model, this is not a perfect stock. It's not perfect. They have tariffs, they have things that are going on around them. But for this price, 34% down year to date, I'm getting as many shares as I can. I bought more E.l.f. today just to be transparent. But E.l.f. forward P ratio is 15.20. E.l.f. reported a 25% year-over-year net sales growth. Quarter 4 2026, they actually announced a 35% net sales growth. So it's their 29th consecutive quarter of net sales growth. Keep that in mind. This company has been growing their net sales for 29 quarters. And they have a 15 forward P ratio. E.l.f. has an easy runway to huge growth. Their international sales growth portion of this was up 38%. If they keep expanding internationally into the UK, into Asia, where probably the import fees aren't as much because they're right there, this company is going to be something big, okay? Because they have a big following in the U.S. They have a big thing. They have a good thing going in the U.S. But if they expand internationally, like I say with a bunch of brands, like, for example, Celsius, for example, if Amazon gets better margins internationally, that would be huge. But a bunch of companies just expanding internationally is the next step in their business model, and that'll bring them huge returns in the future. It's amazing for a cheap cosmetics company, the 73% gross margin. How do you get that? I don't know. But they're selling their makeup for so cheap. To have that margin, it's very impressive. It does not cost them a lot of money to make these, and the tariffs are not helping out, obviously, but these are very cheap to make, and we see this is actually up 140 basis points versus the prior year. Tariffs right here, average tariff rate. This is a huge reason the stock is down, probably one of the main reasons. If oil prices weren't sky high and the tariff rates weren't like this would be, easily $100 plus stock. Like maybe, I'd say 120, 140, 150, somewhere around there. But the tariff rates, these are probably temporary. Maybe they're not. Maybe they're going to stay like this for a while. But, the president's only the president for 4 years. And right after that, we could see a very easy lift on the tariffs. I don't think that's very out of the ordinary, kind of far-fetched to say. And, you see it expanded actually increased by 30% in comparison to last year. So not amazing for E.l.f., but I'm not that worried about it. E.l.f. is a stock that I am buying insanely heavily. Number 2, Hims and Hers stock. You guys know I bought this stock. I'm actually up over 10% on it right now. I bought it at a pretty good time. I've been getting lucky with my buys recently, but Peptides are the future. That is what I believe. I think peptides are going to be a huge thing in the future, and Hims and Hers takes advantage of this very well. We see that they are actually an online telehealth platform. We believe that we have the ability to help over 100 million consumers across the specialties and regions we serve. We see they have weight loss. So United States, they're actually serving, or pretty much everywhere they're serving their weight loss, which is great. That's probably the most popular one if I had to guess. Or I know it is, but let me see United States, they're serving everything from dermatology to hormone health, everything they're serving. Europe, they have a good amount, but Canada, they're still expanding. This is 30 million estimated population. Australia, they're still expanding. Japan has 100 million population, okay? Keep that in mind, and they're still expanding there. So taking that into account, that's pretty impressive. I mean, the fact that they just acquired Eucalyptus makes me feel very bullish as an investor. And this is a company I want to get behind. This is a company that has the ambition. They have the, ambition to grow. They actually want to do big things with their company. And we see as much as 90% of applicable population yet to seek treatment in some conditions. I think we'll see them seek treatment. GLP-1 revenue is going to show in Q2 earnings. So this is going to be huge. I think this could actually be an overthought for a lot of people, an oversight, an afterthought. Sorry, combine those two. But they're launching more offerings at a faster route. You see, they offered testosterone 2025. Don't know how to pronounce that, 2025. Labs launched November 2025. We see FDA approved weight loss. FDA approved is key right here because one of the only concerns that I have with this company is regulatory issues. That's the only concern that I have. That's why I usually stick away from healthcare. But I think that this company has it pretty well under control, and the way that they can grow, the things that they're doing, make me feel very confident. And I'm not really looking at the regulatory issues at the current moment. And this is huge. Hims and Hers completes acquisition of Eucalyptus, advancing its position as the world's largest consumer health platform. Like I showed you guys back in this slide right here, Eucalyptus actually had Australia and Japan on their map. That's who they serve. So the fact that they acquired that, I mean, that just shows the ambition that this brand really does have. And then you look at the company before the stock. That's a big thing. You want to make sure this is a company you want to own, then you want to value the stock. So that's something that I've been, I want to start preaching a little bit more. Like, for example, I mean, E.l.f is a huge example. Like, E.l.f is a company that I'm valuing first. I'm saying, okay, I really like this company, and then I'm looking at the stock price, and I'm double, I'm basically checking two boxes, because the first one's almost enough, but then you look at the stock price, and it's that cheap. I'm checking that box 2-3 times. But this is the beginning of something humongous. You see, they have a bunch of facilities. We see they have their peptide facility acquired in 2025 in California. I really do think peptides are going to be the next GPUs. That is a crazy thing to say. I do acknowledge that. But I think that the popularity with them among the younger generation, the things that they can do, I mean, just look at the, Ozempic. I mean, that's insane. The Wegovy, GLP-1, I mean, wow. But then we look at this, all their facilities, and this is the end goal, I think, for Hims and Hers, is to be FDA approved in all of their own drugs because they can make them for so much cheaper. The margins are insane. If you looked at the recent earnings, then, that's why they dropped. That's why their prices or their costs and things were a little bit higher. Their margins were not as good at all because they just switched over to offering branded GLP-1 products from Novo Nordisk and from, what's the name of the Eli Lilly. So that's something to take into account. But we see their facility in the U.S. now exceeds 1 million square feet in all of their facilities combined. Lab testing increases visibility into patient health and supports providers' ability to provide care for multiple conditions. And I really just like their business model. I think Hims and Hers has a really good business model. It reminds me of SoFi, just having everything completely online. You don't have to pay, you don't have to lease space. And I think this is the future, getting online help with medicine. And this is a little, calculation. I really like Hims and Hers right here. But to grow from $2 or 2.35 billion, that's what their revenue was actually in 2025, to 6.5 billion, which they're saying at least underline in 2030, in 4 years, the principal needs to compound at an annual rate of approximately 29.07%. So Hims and Hers is suggesting that they're going to grow at around 30% revenue growth for the next 4 years. That would make this company a screaming buy right now. I mean, this is a $3 billion company, and you say that, they're making 30% a year, and their stock price is this cheap. That's pretty much an easy double up in the next 4 years. Maybe a triple, maybe a quadruple. I mean, this is pretty easy money, I think. But then we see number 3 is Microsoft. This is a stock that I've talked about before. I bought it at, I got lucky with the timing on this one as well. But this one's still an easy buy. I think I'm up 14%. It actually was, if I'm not mistaken, green for a teeny bit of time. But this one's down still 11.9% year to date. This is honestly really all you need to see with a company like Microsoft. You just look at their forward PE, and it is in that low 20s range. You can just buy the company. You don't really need to look at much else. But we'll go over it for the sake of this video. So growth rates like this, and the company has a PE ratio, forward PE ratio of 21. I mean, look at their commercial bookings growth. Fiscal year 26, quarter 2, 230% growth. Okay, and then we look at commercial remaining performance obligation, $625 billion is what they're going to make. But I mean, what? It's just guaranteed money. And you look at Microsoft Cloud revenue, $51.5 billion, insane. Microsoft Cloud revenue growth, 26 and 24%, very fast growth rates. Microsoft Cloud gross margin percentage, 67%. This company is insane. Microsoft trailing 12-month revenue growth rate is 17.87% year over year. And we see, most recent quarter, they reported 18.3% increase. This company has a 21 forward PE. Oh my gosh. I mean, that's just such an easy buy. And then you think about it again, it's Microsoft. This is a blue chip stock. They're going to be okay. Reddit comment DD. This is funny. This stock is about to explode because someone commented on Reddit. That's not true, but I thought this was interesting. As I was researching the stock, we see someone commented on Reddit, not sure who, and some random, they were talking about Microsoft stock, but they said every employee at their company has a Copilot license, which is 25,000 employees, and it's only AI that is able to be used for the company computers for any real work. And I think that, I've used Copilot, I've used ChatGPT, I've used Claude. Copilot's impressive, and it's made completely by Microsoft. So Microsoft has a ChatGPT along with their already existing business. So this is an insane structure. I mean, that they have that moat, they have the business they've had for so long, and then you add on, a ChatGPT, OpenAI type of product in that business line. Like, I think OpenAI is about an IPO right now with a valuation of, what is it? It's trillion almost. I mean, oh my gosh. And then you get Microsoft, they already have that, maybe an even arguably better version, and then they have their business around that as well. Very impressive. And CapEx doesn't scare me because of its growth drivers. A company of this size, like if there is for example, if Hims and Hers or E.l.f. started raising their CapEx a lot, I'd be scared. I'd be pretty scared. That would be a reason to get out of the stock. If Microsoft raises their CapEx, I'm not worried. That doesn't worry me at all. Microsoft knows what they're doing. They're a huge company. This is not a huge risk for them. It's very overblown, and the way that the stock price has dropped is just something that I think, people get emotional. People don't like, taking big risks and investing, and they're like, oh my gosh, Microsoft's expanding their CapEx to, 37.5 billion. Oh my goodness, I can't buy Microsoft because they're going to lose all their money. No, they have insane growth rates. They have new growth drivers. They have just so much going for them, and this is a perfect buy for the long term. So my overall thoughts, just a short piece for every stock, is E.l.f. is an easy buy. They're insanely undervalued, and it's only due to temporary reasons. E.l.f. is just undervalued because of tariffs, because of oil, because of global conflict. Is this something that's going to last forever? I don't think so. So this makes E.l.f. just a super easy buy. As much as it is makeup, I believe in that. But at the same time, this is just a company that's getting beaten down. This is just literally a vehicle to put your money in that will benefit when the economy returns. So I'm not even looking at it as a makeup company. It's just a vehicle for trading the market as an overall whole. And I think that it's going to play off very well. Hims is the most speculative on this list, I will say, but it does remind me of SoFi early on. I think that SoFi, when it was $6, that's what Hims and Hers is right now. Very much reminds me of that, and they have a big future ahead of them. I feel very confident about this company. The more I look into them, the more I see how ambitious they are, how they're trying to grow their company, and how the future looks, so I feel very happy about that. Also, Microsoft is the biggest no-brainer buy possible. This is a GOAT stock. This is one that's been around forever. They're blue chip. They pay a dividend. They buy back shares every single quarter. They're trillions in valuation. This is an easy buy. It's down year to date. Any dip on this stock is going to be a buy the dip opportunity. Also, investing in quality companies at cheap prices will prevail in any market. Don't try to play the short oil trades. Don't try to short oil. Don't try to buy calls on oil. Don't trade oil. Don't trade global conflict. You're going to get eaten alive in the choppiness. So that's all I have for today's video, guys. If you did enjoy, be sure to smash that like button. Also, subscribe to the channel. Thank you guys so much. Also, be sure to check out the Patreon down below with the Discord inside of it, and be sure to follow me on my Instagram. I will catch you guys in the next video tomorrow. Peace.